Hey there, and welcome back to the Fuse Show. Today we have Aaron Smith. Aaron Smith is a co-founder of Savi. He's a longtime student loan expert and advocate and over a decade of experience in the intersection between higher education and financial technology. He's currently a co-founder leading the student loan repayment and forgiveness social impact fintech startup. Formerly, he's co-founded and served as the original executive director of Young Invincibles, one of the largest and most impactful youth advocacy and policy nonprofits in the country with a focus on engaging 18 to 34-year-olds. Thanks for joining us on the show.
Yeah, thanks for having me.
So I've taken a look at your history, and it's clear that you're very passionate about this space. Do you want to talk about how that came to be?
Yeah, sure. So I have been working on and around student loans for a long time now. I went to law school here in DC at Georgetown, and in my last year of school, instead of sort of going the traditional legal route, I ended up starting a nonprofit called Young Invincibles. And our organization was focused on how to expand opportunity for 18 to 34-year-olds. And we were scrappy. We were just starting out of the sort of cafeteria of the school, but we grew quickly, and we developed this real expertise on higher education, student loans in particular. And so I was the original executive director. We grew the organization to 50 staff, a $5 million annual budget. And we would do things like testify before Congress, meet with the White House, CFPB, around topics like student loan debt. I also had a good amount of student loan debt myself from law school. And so I was both working to change the system, but also dealing with the system. And it's a pretty, it's a pretty broken system, and it's difficult for people to navigate. And so I really just got into the weeds of student loans. And there's so much that we can do to improve the system and improve the policy. And I'm still involved with groups that are focusing on advocacy and trying to change that. But I also saw there was this huge opportunity to help people with student loan debt right now. So there's about 47 million people with student loan debt, and they have to figure out all of these complicated programs. Most of the programs are government programs, so they often have complicated paperwork and application process. And so that's just where we saw the opportunity to serve a really big customer base.
I imagine a lot of these customers, the people who can benefit the most of student loan forgiveness, are generally the ones who are least aware of the process and the opportunities that exist. Is that a fair statement?
Yeah, student loans, it's such a diverse group of people, right? So a lot of the press attention has been people who have $100,000 or more in student loan debt. You hear these stories. And for the most part, those folks are graduate students, people like me who went to law school or business school, or doctors who take on $300,000 of student loan debt. And those folks have a lot of debt, but they also tend to make more income and have more options for repaying. And so those folks are struggling. I mean, we help them all the time. But there's also a population that, honestly, the group that is at the most at risk is our lower income people who may have taken on more like $10,000 in loans, or $15,000 in loans, or even $5,000 in loans, but they didn't complete their college education, or they went to a school and they didn't get the kind of job that they need to support that debt. And so those are the groups that are most likely to end up falling behind on their student loans or in default on their student loans. But it's crazy how many different types of people student loans impacts at this point. For example, we are doing a partnership with AARP to help their members. And you think of student loans, you think it's a young person's problem. But actually, one of the fastest growing group of student loan borrowers in the country are parents. So people taking on loans for their kids. There's a type of loan called Parent Plus loan, for example. And so we just see an explosion in debt among older people as well. So it's a problem that impacts everyone, but obviously, like you said, different, slightly different impacts for the different populations.
So how do you discover the appropriate solutions for all these wide varieties of situations?
It's hard. There are over 100 different government repayment and forgiveness programs at both the federal and state levels. So, keep in mind, of the $1.7 trillion in student loan debt, 90% of it is owned by the federal government.
Okay.
So it's not like your credit card debt or your mortgage debt. It operates on totally different rules. People are trying to navigate these programs. So what we did was we built an algorithm and a platform that basically crunches all the numbers on all these different programs so you don't have to. So you tell us, your income, your family size, who your employer is. We help you sync your student loan debt. And with that information, our algorithm can show you what your options are in ways that, make the process feel much simpler than it is. And then on the back end, obviously, it's doing all the complicated math to sort of understand what makes sense.
So let's say someone wants to go about the manual way. What would that look like prior to the existence of your platform?
Yeah, so most people, if you have federal student loans, you're engaging with one of these, they're called servicers. So like Navient is a servicer. My servicer is FedLoan. So every month you're paying your servicer, and that's generally sort of, they are servicing those loans on behalf of the federal government. So for the most part, borrowers have a relationship with that servicer. So if you have a problem with your payments, you talk to your servicer. If there's a new program, your servicer is supposed to communicate that with you. If you want to enroll in an income-based program or forgiveness program, you will fill out paperwork, and generally you'll send it to your servicer. Sometimes you can do some of that work online, but not always. So that's the process. When I first started to have to do my student loans and I applied for some programs, I would have to fax my forms to my servicers. Okay. So, and this is at a time when people are just, no one even owns a fax machine. So how are you expecting people to have to do this? And so the systems have improved. There are, online tools that can make it easier, but still we see people really struggling with the systems. Just people, even people who know about the programs and want to do the right thing, having trouble getting into them.
So I imagine a lot of this industry is really antiquated. How do they stay on top of communication to notify people about any policy changes at the government level as it relates to their student loans?
So most of the servicers, they have requirements to communicate with their borrowers. So they will send email notifications, things like that. They'll, they can do phone calls and they can send you things in the mail, that kind of thing. Obviously, we're trying to constantly innovate on those types of education communication. So when you sign up for Savi, one of the values is we're there for you no matter what changes in DC. So if Congress announces some new program, we can notify you earlier, even earlier than the servicers. If we can do that, and we can do that through the application itself. When you log on to the application, we can do that via email, all different kinds of channels. If your own situation changes, and you might now be eligible, even things like that you wouldn't think of, like your income changes or you have a kid, those could be opportunities to actually look at your student loan payment and optimize in a certain way. Those are the kinds of things where we can help you and notify you that there might be a new opportunity for you to to save money or get forgiveness or whatever. So it's all about, for us, it's all about building that engagement and trust with the customers and really being an advocate for them, throughout the process of 7 to 15 years that it might take you to pay off your student loan.
So I can see your business and you and your team personally as very incentivized and passionate about educating people. Do you find that traditional or are traditional servicers financially incentivized to keep their, I don't know, the people they service in the loop when it comes to these policy changes if it reduces their payments?
They are typically legally required to communicate with them. So I think that's less the issue.
Okay.
I think that more the issue is a trust factor. People often perceive their servicer as a debt collector.
Yeah, that's what I meant.
And what's your relationship with a debt collector? Like, you don't want to talk to them, right? They call you, you don't answer. They send you an email, you delete it. So people just have that kind of relationship, and it's hard to break through that, even, frankly, when the servicers are trying to do the right thing. So, one of the things that we've done is we distribute Savi through channel partners. So membership organizations, I mentioned AARP or NEA, the largest teacher union, employers. So we work with hospitals, colleges and universities, all different kinds of employers, financial institutions. And so getting information from your employer, for example, saying, hey, here's a new benefit that can help you figure out your student loans, we think is key to building that kind of trusted relationship. So it's like, it's not just, hey, another group that I need to try to ignore, but someone who's actually, there with my best interests at heart. So that's been a really important part of our growth strategy.
So I can tell there's clear value for users who want to come to your platform. How about what you get from users for the platform? Like, I guess, what is your financial model in the whole situation?
Yeah, we try to be, one of our key being super transparent with consumers about how we make money. So basically, you can use our platform for free. You can log in, sync all your options, and we have a premium service. So if you want, think of it like your student loan concierge. Like, you want someone who's going to help you file all the paperwork, or you want to talk to a student loan expert one-on-one. You want that extra monitoring to make sure you're following up and doing all the right things. We charge, typically it's around $60 a year.
Okay.
That's our premium service, right? And so that's the main way that we generate revenue. Sometimes that fee is paid by our partners on behalf of their employees or members. Sometimes it's paid directly by the borrower. But it's put it in context. Our average user is saving over $150 a month. So to pay $60 a year for $150 a month benefit is a pretty good deal. But the way it works is, we're there for you over the life of your repayment. So, if we build a good relationship, then you'll keep coming back to us every year, just like you do TurboTax, because we do a good job, and that it just makes your life easier. So that's how.
TurboTax was the example I had in mind when I was looking at your website and your description. I was like, oh, this seems like a lot like TurboTax, except different side of it. Yeah.
A really smart business because it makes it so easy for people. I think the similarity with student loans is most of the government paperwork you have to do every single year, similar to your taxes. So there's a real incentive for people to come back the following year, because you don't want to fall behind on these programs. You don't want to lose eligibility for these programs. But the next year, it's obviously so much easier because you've already created an account with Savi. We just ask you, hey, has anything changed or in your life or your circumstances? But it's very easy to sort of just stay on track once you've gotten into the system.
So if we're talking $60 a year, let's call it about $5 a month. How many users do you typically anticipate, or how many users would you like to get from a given channel partner to, I guess, justify the effort per channel partner?
It depends on the type and size of channel partners. For us, the product was built to scale pretty easily. So there's not a lot of marginal costs as we scale, as we gain new folks. So we're trying to sign up as many people as possible. And then the things we see are partners where the eligible population is in the public sector, so nonprofit, healthcare, education. We're tending to see those groups have higher percentages of employees with student loan debt, more debt relative to their income. So imagine a nurse who makes $60,000 a year but has $50,000 in student loan debt. Same thing with teachers. Like, those are populations for whom, and by the way, those are populations that are eligible typically for forgiveness. Those are populations where we're just going to see higher uptake levels, higher numbers that are going to want that premium service, and we sort of can project pretty accurately how that's going to work. And then obviously we're looking for scale. So many of our partners can reach, 1 million plus members or customers in their networks. And for us, as a business, it's a lot about working with them on the outreach campaigns and the education campaigns to get as many of their folks aware of this new program as possible.
If you had to guesstimate, what's the percentage of people who have student loan debt that are not fully taking advantage of forgiveness programs available to them?
We estimate about two-thirds,
wow.
or a little over 30 million people out of the 47 million student loan borrowers are either not taking advantage of a lower repayment plan or are not taking advantage of one of the forgiveness programs.
Okay. That seems like a pretty large audience.
It is a lot. It's a lot. You know what it's like? It's the TurboTax analogy. It's like, imagine you didn't have an accountant and you didn't have a tax software and you had to keep track of all the tax deductions.
It'd be awful.
You would absolutely miss a deduction.
Right.
Well, there's just millions of people who are just missing the equivalent student loan deduction. They're just leaving money on the table, and it's not. To me, it's just that the system is complicated, and so I don't. Even people who are super well informed about student loans miss things. But yeah, it's a large group, and it's going to only continue. I mean, there have been projections that we'll add another $1 trillion in student loan debt over the next 10 years. Student loans are already bigger than credit card debt. So just a massive problem and a huge number of people impacted.
The more you talk about it, the more I'm surprised the price is just $5 a month. I feel like if you're saving a couple $100, it's not unjustified to charge $10.
It is extremely reasonable price.
Right.
Yeah.
Okay. So I imagine attracting customers is not all that difficult once you just educate them about all the savings they could be potentially reaping.
Yeah, we even part of our model is based around this. We have this free service because we want people to see everything that they're eligible for. I mean, it's a huge, driver for people to want to continue. It's once you know that you're eligible for $30,000 in loan forgiveness, that's a pretty big incentive to move forward. I think traditionally the biggest players in the student loan space have been the refinancing companies. So think about like a SoFi or a Common Bond, right? And what we saw was most of their base is higher income people, like doctors and lawyers. They're looking for someone who makes over $150,000 a year, has over a 750 credit score, just, not the broad middle class. And so that's where we kind of saw there was this gap. I think higher income borrowers are always going to want to think about refinancing. It might make sense because they might not qualify for some of these government programs. But there's a lot of people that are in the middle.
So would you say you specialize primarily in government programs versus like trying to optimize the finance calculations for the upper middle class?
We actually have a student loan refinancing marketplace.
Oh, okay.
And we partner with a lot of the refinancing companies. We're actually, I don't even see them as competitors. I see them as just serving a slightly different subset. But, when we do a partnership with a hospital, like we partner with Hackensack Meridian Health, which is a big healthcare system in New Jersey, we'll get doctors who make $300,000 plus a year, and we'll get administrators who make $30,000 a year, and we need a tool that works for all of them. Okay. And that's what we built.
So let's talk about that path to getting all these channel partners. Do you just like send them an email, send them a postcard? What do you do to get their attention?
Yeah, we're constantly trying new things. I think that student loans, it's an interesting opportunity because for the most part, while I would say there is very broad awareness that student loans is a big problem, if you talk to someone in HR, they're not going to say, oh no, student loans is not a problem. Right. But still a very small percentage of companies have any kind of student loan benefit. Most employers don't have any, it's not your typical part of your benefit package. And so unlike another type of company that might be trying to, I have a better retirement plan or I have a better health plan, we're really introducing a brand new benefit for most of these partners. So there is some educating that has to happen to say, hey, student loans is this big problem that's only growing, and you, and as an employer or a membership group or financial institution, really want to differentiate yourself for your employees, for your customer base, and say, look, we're solving this problem in a way that others aren't, and that's why we're partnering with Savi to bring this to you. So I think that first step is the most important part for us. And we've done a lot of media. We do reports on the state of student loans. We do conferences. There's a lot of word of mouth, a lot of inbound interest, where people start to see who's a leader in this student loan kind of benefit space. But I would say that's a common challenge. And there are misconceptions. So sometimes I'll talk to an employer that, let's say, has a lot of lower wage hourly workers. So you run like a restaurant. You might assume that why do my waiters need Savi or a student loan benefit? They didn't go to college. But that's actually wrong. A lot of people who work in the service industry went to college, or maybe they went to some college but they didn't complete, and they might have student loan debt still. You can't just assume based on someone, whether they're hourly, that they don't have student loan debt. So that's the kind of example of a misconception sometimes that you're dealing with, when you're talking to employers. But then it just sort of builds on itself, as you build up a great roster of partners, people see that, they share notes and they say, oh, who do you use? Oh, okay, Savi they're great. And that's been huge for us.
So the journey for the first partner was probably the harder one. Is that fair to say?
Yeah, I think that's true. I think that's definitely true. The pace is really accelerated as we've gained more and more partners. So to the point where we're signing up just so many more partners every single month now than we were a year ago. We started, I think like many startups, by doing pilots. The the technology was new. We wanted to test it out with a smaller number of people. We wanted to show the partner how impactful it could be before they rolled it out to their huge population that they represented. So I think that was it's a logical way to roll it out. And we gained a lot from it, both in terms of getting new partners, but also just in terms of improving the technology and figuring out the pain points for the users and just being smarter about it.
So when you want to establish these partnerships, is there like a head of department, or head of partnership person that you just like email, or do you have to take like guesses in terms of who might be the best person to contact within individual companies?
Yeah, it can vary a fair bit. Like I said, partly because this is a brand new student loan benefit, a brand new type of program, it often requires engagement at a really high level. Like you want the kind of C-suite type folks to feel like this is a new thing that I want to be able to really brag about. And so oftentimes that's a super helpful angle, but it is a constant experiment. It's a constant game of experimentation, figuring out sort of the best, most effective, most efficient way in. And what you ultimately try to get is you try to get a champion internally, someone who, and that's again, the great thing about student loans is oftentimes people, they can relate personally. Like you might get that HR person who they themselves have a bunch of student loan debt, and they're like, yeah, I would love this for myself and for all of our employees, and they become your champion, and that's huge. And frankly, if you don't have a champion, if you don't have a product that people are going to get excited about, it's harder. It can be, HR and just generally B2B, I think can be slower and can be more of a slog. And so that's been key for us.
What percentage of your users come from these channel partners versus other forms of outreach?
Almost all of our users. We're not we're not a true direct to consumer company.
I see.
You can think of it as B2B or B2B2C. Like I said, I think that there's a lot of value in having partners that are vouching for you and going to their networks and saying, hey, versus the kind of wild west of the direct to consumer kind of marketing. And so we've just seen a lot of, growth as a result.
I imagine as a user though, so let's say I had student loan debt and I saw the benefit of your platform and I started using it and I was able to save money. I would love to tell my friends about it, but if it's not a direct to consumer model, I'm guessing my friends can't sign up directly. Is that right?
Yeah, I mean, we get this. Sometimes we'll say, hey, go to your employer, get them to sign up. Go to your membership organization, tell them to sign up. So that is that's the downside, I think, to the B2B approach. In some ways, it's harder to kind of go viral, so to speak, when you're not doing the direct to consumer channel. I think another value is obviously in B2B market, there's more ways to get paid. Yeah. Like you can get paid by the entity for the premium service. You can get implementation fees or licensing fees. Like there's just a broader way that you can build revenue quickly. I think in the direct to consumer space, while I agree it presents opportunities for growing quickly, it can be expensive, and the revenue can be more challenging. So anyway, that's just a little bit of the kind of the pros and cons. I think there's strong arguments for a multitude of approaches. I also think that student loans is such a massive market that I would expect there are going to be a multitude of approaches
I
to
see.
kind of serving student loan borrowers. There's not going to be a kind of one size fits all.
So there's no technical limitations preventing like a direct to consumer model if that's something you decide down the line. Okay. Have you noticed a difference, I guess, pre and post COVID as it relates to adoption?
Yeah, I mean, as you know, student loan payments were paused in basically in March 2020 after COVID as part of the CARES Act, and so it's kind of a crazy time. Like I haven't had to make my student loan payments for over a year, and the vast majority of student loan borrowers have not had to make student loan payments on their federal student loans, to be clear. You still have to make payments on your private student loans generally. And there's some kinds of even federal loans that may not. But most people haven't had to make payments. And so that definitely impacts the urgency that people feel. Like maybe student loans, the typical student loan payment was about $400 a month. So that's $400 that you haven't had to pay. Maybe you're spending it on paying down your credit card bill. You're spending it on other things. Like, it's not going to be as much top of mind. So we've grown tremendously over the last year, even with that payment pause. So I think that's like a really good indication of just how strong people still know the debt doesn't go away. It's just basically on pause. So they know they need to figure it out. But yeah, payments are set to resume this fall in October. So again, I think it's a big challenge for the student loan community and frankly for the broader community, which is we're going to have tens of millions of people who all of a sudden in October are going to have to start making student loan payments again. And I think there's a lot of concern that people will be confused, that they, maybe they had auto payments set up before and now they turned it off. They're going to have to turn it back on. Like it's a huge sort of engine that has to be turned back on. And so we just think there's a lot of educating that has to happen. We want to get all different kinds of entities, from the government to the servicers to startups like us to big financial service companies. Pretty much everyone needs to be talking about this issue so that borrowers get back into the habit of making their student loan payments. And then you just don't want people to fall behind. If you fall in default on your student loans, has a huge impact on your credit. Your balance can go higher as you accrue interest and all this kind of stuff. So it's going to be a really pivotal time this fall as payments resume.
You've talked about it a little bit prior, but I just wanted to, I guess, ask in a more concise manner. What would you say is the thing that motivates you in life? What is the North Star that guides you for this journey?
I am passionate about helping people with this huge and crushing burden of student loan debt. It's something I feel personally impacted by, and it's something that I've just seen so many of my friends and other people in sort of my community have their lives impacted by, and really, affecting everything from their decision to start a family, buy a house, get married, move, change jobs. It's like so many people, it's impacted by student loan debt. And so if we could have a role in solving that problem, that's something I'd feel super, super proud of. Beyond the issue itself, I've always thought it's fun to start things and to think about how to sort of solve big problems, particularly ones that are intersecting with government policy, because it's I think that there's many industries that are at this intersection between government policy and private consumers. And these businesses are trying to navigate that. And I just think there's oftentimes a lot of opportunity there, because the government programs are not often, or I should say, they're often well-intentioned, but they're challenging for people to navigate. Whether that's on the mortgage side or like food stamps or healthcare, like you name it. These are all industries that are heavily impacted by government policy. And so I just think it's fascinating. You're sort of, you're in a way, as a private entity, you're maximizing the efficiency of these government programs by making sure that the people who should be benefiting are getting the most benefit out of it, and are able to find and take advantage of those programs. So that's fun. And then, I mean, building and starting a team is super fun. We've grown over 30 staff, and I went through the same process at my nonprofit, Young Invincibles, where you see it grow and you see people taking on more leadership responsibilities, and as a leader being able to say, okay, so-and-so, they've got this now. Let me go focus on the next thing. That's a really fun.
So what does it take for you on, call it like a typical day, to like end the day feeling really satisfied?
I feel really satisfied when I've sort of confronted a real challenge and feel like I've made some progress. It is easy, I think. As a leader, I think it is sort of your responsibility to figure out what are the big challenges, which are oftentimes not that much fun to deal with at a granular level, but that's your job. And if you're good at spotting what those problems are, hopefully you can avoid them becoming really big problems down the road. But then sort of hitting them head on and saying, okay, this is, if we can solve this problem, it's going to open up all these other opportunities. So when I feel like I've really done that in a given day, and maybe we've thought more creatively about how to approach this problem, or we've brought in a new partner that's going to help us address it, or thought of a new way to structure the product to address it. That definitely feels really good at the end of the day.
So out of your team composition, out of that 30 plus group, how would you divide them into, like, I don't know, categories of sales, marketing, product, etc.?
I mean, product and engineering are the biggest.
Okay.
Is the biggest group, and then we have small business development. We have a growing partnerships and account management team, because as we bring on these new channel partners, we want to work with them and make sure that we can support them. We have a customer success team. We do a lot of external affairs, so we have an external affairs team that does media and communications work and figures out some of these like interesting new partnerships that we can build. So it's a pretty diverse mix, and a lot of that growth has happened in the last year of COVID. So it's been it's a little bit of a weird time to grow. Like, we've had people we've hired who've never been into the office, who've never met a lot of their colleagues, and so that certainly adds a challenge to it for a growing startup.
Is this your first time leading a group of technical staff, or have you done that in the past as well?
My co-founder, so I have a co-founder, Tobin Van Ostern. He sort of oversees more of our product tech team, and he has more experience managing like an engineering team or developers. I grew out a nonprofit which had obviously diverse teams, operations, and all different kinds of teams, but not as dependent on engineers. It's one one of the big differences with the tech sector is obviously, you're building. There's a lot of similarities, I'd say, between startup life and kind of nonprofit startup life that people don't always appreciate. Like, you have to be pretty lean in nonprofit startup. You're basically, you cannot operate at a loss. Let's just say every year you have to bring in the amount of money that you're going to spend, and you have to be very thoughtful about that. When I first came to sort of startup tech world, and there was this idea that you could just lose money for years, that was a crazy concept to me. But figuring out what staff are really hungry and building out the teams, those are definitely similarities. But then obviously the technology piece, huge driver of our business and any kind of fintech business.
How'd you meet and choose your co-founder or co-founders if there's multiple?
Tobin was his background. He had done web development work. He had helped to lead some of the youth and digital engagement work for the Obama campaign in 2008. So kind of that mix of technology and I would call it sort of civic engagement was where he'd done a lot of work. And then he came to DC and he was working at a think tank that actually ended up working a lot with Young Invincibles, my nonprofit. And so we just became close. We would do things like go to meetings at the White House with President Obama.
That's cool.
And sitting next to each other. And so we just got to know each other really well, and just saw, like I said, we saw that there was this really interesting opportunity to kind of combine our knowledge around the policy landscape and around technology to help student loan borrowers.
If your co-founder's domain is the more technical, I guess, engineering product side, what would you say your superpowers as a leader are?
I tend to lead our business development and kind of partnership work, and I think I'm the kind of person who's I think there are some people who don't want to partner. They just want to build everything themselves, and like they're kind of they're perfectionists, like they can always do it better than someone else. I do not generally have that mindset. Okay. I love partnerships. Okay. I try to be very creative in ways to bring value to like us and to the partner that we're working with. And so that's, if I have a superpower, it's probably in that kind of building strong creative partnerships. And that's been, really key for the business to.
How would you say you hone that skill? Like, how'd you start that skill?
How do you start that skill? I mean, it's inherently, partnership building is inherently an entrepreneurial skill. I think I was talking to my wife about this. You have to have a willingness as an entrepreneur to talk to anyone and to just talk about ideas and get information from other people and not be worried that, you don't have the perfect idea right away, or you don't know all the answers and someone else maybe knows more than you about a topic. And that's sort of, I've always tried to take that approach. So when you're thinking about an idea, going out and meeting with as many people as you can. It doesn't seem like rocket science, but a lot of people, they don't want to go talk to 1 million people. You really just got to go talk to 1 million people, and maybe you discover along the way that your idea could be improved, or you discover that one of these people could be an interesting partner for you in building out this product. And so I think the way you get good at it is you just have an openness to talking to other people about your half-baked ideas. And in the long run, it pays off. But every context is different. So like, I've had to learn about building new types of partnerships as Savi has grown. It's not there's not not all partnerships are created equal, I would say. But yeah, that's some of the work that I get really excited about.
So were you like this were you pro partnership as a like 5-year-old kid, or like was there a certain point in your life where you're like, oh, human relationships are incredibly strong and highly underrated?
Um, I was. I'm trying to think about that. I think I was never afraid to talk to people
Okay.
and potentially appear seem like an idiot for saying something or offering an idea that wasn't fully fully thought out. Um, yeah, I'd say that again. Your idea is not going to be perfect right away, and just sort of acknowledging that and being willing to put yourself out there for people, I think is extremely valuable trait, and I was interested in that from a young age, and then I did do a lot of political organizing. I was involved in political campaigns. I built nonprofits and other kind of social entrepreneurial ventures, and I think that's a big part of the social entrepreneurship sector is this idea of partnerships, and that you're building something with other groups, and it's collaborative. In some ways, I think it is inherently a little more collaborative than maybe the pure traditional tech sector, which just sort of says like head down, build the best product, and you're going to win. I'm not. That's a stereotype, but like I think if you're in a less tech-heavy world, like the political organizing world, like or just community organizing world, I think that's really important. Important work. So yeah, I think I saw the value of that for a long time.
Okay. Well, I do recognize we're running up against our time, and I just want to be respectful of your time. So I just have a common question I like to ask all of our guests. What would you say is the best way for our viewers to get in touch with you?
They can just email me. It's aaron@buysavvy.com. You can check out our website, www.buysavvy.com. And yeah, thanks for having me on. Really enjoyed